Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.
I was going on. No way. So it
We are
wasn't
now.
recording. Ah, great.
All right, wasn't recording. All right, so we just gotta look in the top right when it says record. I was going by the tab. Okay.
There is a setting we could talk about on Sunday where it will have it auto record when we log in.
Okay.
Yeah, right.
So
I
just
thought I had
blame
that in my settings.
for this week. We'll just blame him, because he should know better. It's all good. I guess. Maybe you guys will start watching it.
Yeah, right.
I want to touch up on what Ram said. First, I want to tell you about the McDonald's thing. Because I don't know if we still got the person on here, but there was somebody on here that do like they double cheeseburgers with extra bacon and cheese. I did not forget, and that was about 6 months ago, and I did not forget. I was interrupted. Everybody was on mute, and then this person was in the drive-thru. So if you're on here, hopefully you don't make this mistake again. This person was in the drive-thru.
Mr.
ordering,
Fries. I remember he wanted the fries.
and it was extra bacon too on the burger, and I won't forget that. So this is for you because you're probably getting a little hole in your pocket now. So McDonald's, they had to feature a $4 breakfast meal deal alongside a $5 McChicken and a $6 double bundle because not enough people are buying. And that's crazy that $4 or $5, $6, that's still a lot of money. You remember when that shit used to be like $2 son, for some fries? So when the world's largest fast food giant has to forcibly cap menu prices at $4 to $6 just to get people through the drive-through, that's a red alert. It proves that lower income bracket is maxed out because of inflation, and no one can no longer afford standard menu pricing. So they have to do these deals and stuff. So then another thing is management openly admitted that their corporate operated margins were not acceptable this quarter. So they were saying based off their numbers, the sales, it wasn't acceptable. So this is stagflation right here that we're going to start witnessing. We're going to start hearing. I said that last year. That word will start coming out more than tariffs, and we're going to start hearing stagflation. Stagflation is the worst thing. We think inflation alone is bad. Stagflation is the worst thing that you can go through. That's the worst thing that economy can experience is stagflation. So they're dealing with high wholesale beef costs and elevated labor expenses, but they cannot raise prices on consumers because then it's going to destroy the foot traffic that comes in. So they're like they're in a little pickle. And then if McDonald's and Walmart is selling us signs like this with the traffic is getting low, but they have to raise their prices, but then they don't want to raise their prices, they're going to get hurt. And that's going to overall hurt the economy. We're consumers. We don't build nothing at all. So that's one thing that I want to talk about. And then another thing that I want to share with y'all is we're on schedule. We had this mapped out for a minute. Operational strategy board had this mapped out for like about 2 weeks before the drop, before the pop. It's crazy how we just like almost like we knew it was coming, almost like we predicted it. So I had gotten the put on SPY based off of not the chart but the economy And then later on, once I got into play, it was based off the chart, looking at the chart. But we even put here the dates, right? We said today, whatever. I forgot what date it was. I don't feel like going to check it. Just know it was 2 weeks ago. We was at 750. Was it 2 weeks ago? All right, almost. We was at 750, right? And I said that was the exhaustion piece. That's the exhaustion peak. That's the top. And we'll go down to support $731.83. I said hopium. Retail would try to save it, and we will watch the bounce fell. Right now, you're watching the bounce. We said this will happen from May 22nd to May 26th. Well, what date is it at? It's May 22nd. Yeah, we're right on schedule. And then so we're gonna watch this bounce fell. I haven't decided yet if I wanted to go with my caramel. No. Chamomile. I'm probably gonna get the chamomile tea when I'm watching the market drop because I want to be calm and like sedated, like relaxed almost. Yeah, I thought I was gonna say something important. And I don't know if I want that or the sea moss because the sea moss will have me hyper. But then if I have too much energy, I might get into a put on top of the put that I'm already in. I don't know. We'll figure that out. But we're gonna drop. We're gonna continue to drop. This bounce is a relief rally, a dead cat bounce. If you chase it, you will get smoke. I'm not coming to save you. I'll just simply time you out in the Discord because we told you. It's like not playing. But anyway, so from June 18th to June 30th, but it seems like we're ahead of schedule. So I would say June 14th to June 26th, around that area, we should be around that 710 area. And if I'm wrong, just blame me and tell me I was wrong, and then I'll just say, yeah, I was wrong. And yeah, that's it. But if I'm right, I was right. Okay.
I want to add on, Ab, because these are really cool graphics that you put out, but to everyone on the call, like this is really good information. Like when Ab posts these, the first thing you should do is look at these levels and put them on your chart. If you want to add more detail, that's fine, but I like to narrate price. You can see like when I post my summary of how price, I just like to narrate what's the story price told me today. And so when we get these graphics, like it's super helpful to put them on your chart and like this is where the exhaustion peak will happen. And then if we fade right here, we should come down here. And then you start to build a narrative around price action. And then it becomes second nature how like Rams put up the chart and was able to rattle off price action. And I say that because I was reading Ash's question, which I love this question. She says, Rams, that was a great presentation. I'm wondering though, how can I start to put the story with the price action like y'all so I can really make sense? And I really don't know where to start. She does know where to start because she's savvy with price action already, but but I do think there's a storytelling piece that's missing. And I think that part of the tools, I think one, Ab and Rams, we could talk about that in more detail, how to help folks put those pieces together. But then also one place to start is the information that Ab puts out with specific levels. That's part of your story. It's part of the narrative. Price can go here. If we don't get above, it's going to come down here. You know how we always talk about structure and level to level. That's the narrative. If it goes here, it's going to break structure. If it doesn't break structure, it's got to go to the next structure. And then you start to build the muscle memory of like visually seeing that on the chart of where structure is. But I love this question, Ash, because I think it's such a missing piece of being able to read price action is putting the storyline together.
I agree.
That was good. So that was amazing. $731.54 we came down to. So like, again, like Talisha said, look at the graphics. It takes 60 seconds, and this is because of her. Or y'all, it's either hey, you watch this, and I know you're watching this, all right, or we could just keep going on with my essays. I have no problem writing the whole thing that you guys don't want to read because I talk to myself. So I don't care about writing to myself. I'm gonna still read it, and then on Sunday I'm gonna read it to you anyway. So you still kind of gotta hear it. Anyway, so we went to 7. $731.54, and we put on here $731.83, and we got our bounce. And now we're actively watching retail get smoked because look what happened. So after that bounce, we just slow grind it up, and once we get a big candle, we'll just consolidate, and then we gapped up, but slow grind up, and there's consolidation. This is nasty right here. So 750 is the top, and we just waiting. Wait for your levels. I'll update in the Discord. Just while I'm here right now, I'll just tell you right now the level that Ram says 735 is a call wall that's being defended. When we dropped to 731, we popped back. You notice we was hovering around that 735 area a lot. So that is the area that we want to take out right now. $741.45. The 5-day and the 10 is right there with each other. We need to take that out, and then 738, and then we're back to that $731.65 area. That's the exact level. And that's just something. And make sure y'all keep your eye on WTI, Brent. VIX is still compressed. Right, we can move on to the next.
But everyone has homework to put their levels on your chart.
Yes, this
Put
will
the levels
definitely
on your
help.
chart and see how price responds.
Yeah, because SPY is, I noticed since y'all got introduced to me by myself. So since y'all seen me charting, I never really be on QQQ. I know, like, I'm aware of what's going on with QQQ, but I'm solely focused on SPY. That's 500 of the best companies, if you ask Trump, in the world. So we want to focus on that. So what if it decides to go up? More than likely, the market is going to try to follow, and vice versa. So that's why I'm always on SPY. Always, 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 always. So we're at $16 on the VIX. Yeah, we're gonna keep grinding up. So one thing, all right, while we're on this, before we go to the next topic, I just want to say about the tech, the semis, and the software. That's where you just want to be careful because for years we've been dumping and dumping and dumping. But can anybody just answer in the chat why do they even know why we're ignoring all macro? Because it's this not the first year. It's been like 3-4 years we've been ignoring bearish news and still ripping to all-time highs every year. Do anybody know one of the reasons? It don't have to be the reason, but one of the reasons why that's happening. It's one simple word. It's 2 letters. If anybody can answer that in the chat. I'm not looking. Probably wasting my time going to the chat. You guys just like don't answer me. All right, boom. Levine got it off the rip. So the market is pricing in AI, right? Taking over, but again, AI is not here. They've been building this since the 90s. We're doing evaluations of what we think AI can be worth, what we think. So we're going off of not hard facts, it's just what we think. So it's going to be a lot of uncertainty happening and stuff. Now we're getting closer though, so we starting to see AI really pop off. The reason for me telling y'all this is because everybody chases the next hype, the .com bubble and all of that stuff. So this AI is crazy. So semiconductor revenue looks good on paper, but a lot of the growth is exaggerated. DRAM, this is Ramsfield, DRAM and NAND prices is getting inflated heavy. So the numbers look strong, but underneath the industry spending isn't going towards massive production expansion. They're pouring money into advanced packaging, research and demand, and AI infrastructure because the whole sector got all of its chips stacked on one table. But regular consumer demand is getting crushed. Like our phones, our PCs, and everyday tech, people are not upgrading before like Ab got to iPhone 13. It still works. I'm not updating it. People are not upgrading like they used to because of the cost. The cost is way too high. So now the entire semiconductor trade depends on hyperscales, and big institutions continue to dump billions into AI data centers. That's dangerous, right? So this is where you're putting your money in. Almost 90% of the semiconductor stocks are trading below the 200-day moving average. That, let me say that again. Almost 90% of the semiconductor stocks are trading, not below, above the 200-day moving average. Sorry, almost 90% are trading above. So that's institutions and retail all just sitting in the same boat. Expectations are priced basically to perfection right now, while liquidity is getting tired. Kevin Wash is he's stepping in now, and he's all about liquidity draining the liquidity out. Where's all liquidity at? All the liquidity is in the semiconductors. So when institutions decide to sell, what's going to happen to you? The pullbacks are going to get violent. You're going to get smoked, and it's going to, I don't know if y'all know, these drops don't tap you on the shoulder and tell you you should start selling positions. They happen overnight. You wake up or rise up. At that point, you waking up from the dead because what you about to wake up to. You get that little crust out your eyes and stuff, and you smoke. Your account is down by a lot because you don't see it coming. So now we go to software. Software ain't cheap. Software is structurally broken right now. Every major software stock in the S&P 500 is under the 200-day moving average. Software. Semiconductors, 90% is above the 200-day. Software, almost all of them are below. So, but the biggest gap between hardware and software we've seen in the market is literally right now, because AI just introduced a whole new fear into the business model. Corporates are going to ask, why are we paying millions into SaaS subscriptions every year if AI agents can't automate or build half of these functions internally? There's going to be a lot of questions now since this war is getting bigger and bigger. So basically, semiconductors are overcrowded. It's a hype trade right now with razor thin margin for error. And then the software is already structurally broken down. It's showing you that already with the recurring revenue model. If you look into all of that, it's smoke. So basically, it's not an AI bubble, but at the same time, it's the bubble that we're in is being fueled by AI. Semis is going to drag the market down. Software is already ready to drop. The semis is going to go. The tech's going to go. That's the heaviest thing. That's NQ. That's QQQ. Once that go, the market has no choice but to follow. So this is why you don't want to be. And then one more thing that I want to talk about is ETFs. When I was taught trading, I was taught to buy ETF to like invest in ETF, and then I found out like years after that that's probably one of the dumbest things to do. Not saying buying ETFs is dumb, but having your account of just ETFs is stupid as hell. And why? Because if you're buying SPY, QQQ, SM, long story short, when you're buying these things, what companies are going to be in every single ETF besides like oil? You're gonna have Google in there, you're gonna have Microsoft in there, you're gonna have Amazon in there. All these names Nvidia that I'm gonna start naming has AI in it. Every single name. So you're not safe and you're not what do you call it?
Diversified.
Yes, you're not diversifying your portfolio. So if you're getting all Nvidia, just all these hype stocks, when the market do decide to crash, it's going to wipe you out so fast. Those gains that you've been gaining these 2 years, it can get wiped out so fast. You don't have to get into oil and stuff like that, but you want to maybe get into some safe haven stuff. Don't just jump in, but stop over leveraging yourself in just one field. The semis, tech, and software is like that's basically a field itself together. It's all wrapped around AI. So uh I can't stress it enough because I've seen it happen, and I know y'all not gonna listen because we just seen it too happen in traps. When I was in the Patreon, I seen a lot of people get hurt because we just chased the hype ones, the Googles, the Nvidias and all of them. So when they drop, it's going to be hard to recover. And your year back, you probably just break it even, or you're probably still bankrupt mentally. not even financially, just mentally. You're scared to get in trades still and stuff like that. That's why it's important not to over leverage. That's all I got for that one. Sorry, I went in a little too deep on that one. So yeah, hardware bubble. All right, so what's the next one? 247. Peace and blessings, Darnell. Who was the other one that came in? I'll get back to looking at it. So now where we at? We're there now. Because I mean, we kind of went into this. The core focus, momentum rotation, sector, and theme is still the same for me. I'm just briefly like a minute. Is we're in phase one of this AI build out. That's basically energy. Find you a good energy company. Ram's going to show us in this next segment when we go into the watch list. But right now, you want to. I believe this is not financial advice, but I believe that you should be exposed to one of our strong energy companies in the watch list that Rams will show you. And you don't have to do shares, but I think you should do leaps or shares. I think you need to try to stay away from the short term swings right now because the tension is about to build over the weekend. And now we're dealing with countries' dollars falling or China, we got Russia bombings and stuff. It's a lot right now. So that's all I got for that. I don't as far as spying stuff, try to stay away. Be careful. Limit yourself. Have rules, whether it's 4 trades a week or something, but start giving yourself rules to limit yourself because these green candles and red candles they're gonna make you chase. But set that rule in place that tells you because if you're already at 3 trades for the day and that's all you allow yourself, if you go to 4 trades and you lose, that's on yourself. So you can't blame the market. That's all I got for that. For a sniper focus list. Do Talisha or Rams want to add anything to their core focus, momentum rotation, or sector theme focus?
No, I have nothing to add.
Anything, Talisha? It's okay. I'll wait. She probably stepped away from her computer. So I won't wait. So we're on to first of all, how's everybody doing? It's so quiet. Like, damn, my kid's not here. I don't hear nobody right now. And I can't read the chat all the time. You got that 13 Pro Max with that mega memory. Okay. Okay. I don't got all that, but I brought me some gigabytes though. Okay. Yeah, I got unlimited hotspot. You know, I got that. How everybody doing though? Y'all feeling good? We good? Yeah.
We here,
That's why
bro.
his battery's always dying. No, it's not, Angie. I'm just a businessman. I'm just a businessman, not a businessman. Who says that? This Hove. But no, I literally be up 5:30 and shit. I'm charting. I'm on YouTube watching videos. My shit by noontime, my shit looking to die. Locked in, blessed. Peace and blessings to you, Darnell. And it was okay. Peace and blessings, Jonice. Peace and blessings. All right, boom. All right, we cool. So now, without further ado, Rand's about to show y'all his amazing website. Um, amazing,
Yeah.
and that's what we're doing right now. Because we got 2 more segments after this, so we're doing good. It's 2:51.
This won't take me long, but it'll take me some time. So I'm gonna just um explain because I want to explain everything so you guys can start when you look at the website, it's not just colors and optics. I want you to understand what you're looking at. So a lot of people are overpassing. This is why I put this right at the very top, right? Even with the ticker strokes going, tabs, of course. But this right here gives you context, right? So And I want to answer. Who was it? Ash that asked about reading the context. She can do it. You can do it too. It's just what are you watching every day that you're starting to get comfortable on picking up those signals, right? So what's in your strategy that you watch every day? The levels, how the candles react there. If you're watching your fair value gaps, whatever what moving averages you're watching, how the candles, how price responds at that moment in time. And when you watch that over and over and over, this is why it's very important not to do the strategy hopping per se, always switching your main strategy for a whole new strategy. What you can do is understand, start learning somebody what they use and add to your bag, right? So you add to your toolbox, but you never switch what you actually understand, where you take time to study, grind in your head. And now every time you look at a chart, you can just spot it. But that's the only way to get the context, your level of reading context, right? So you want to just practice it every day. Just keep watching it because over time, that's what's gonna develop that vision. That's the vision skill per se. We don't we don't we don't all have it. We all have to keep looking at the patterns, at the flag, at the level, at the volume, at damn. All right, so then now you start understanding by looking at the pattern, at the flag, at the level, at the volume. Now you start like, yo, I seen this before. Oh, I seen how when it wicked like this the last time, right? Price just ran. Why? So now we learning liquidity in the group, how to snatch, boom, snatch and go. So now when you look at the wick, you're like, oh damn, like that was a snatch and grab, real quick, bang, and price just boom, price just went, boom, boom, right? Because it might have snatched whatever was here, whatever was sitting here. So now you just start learning certain little things that you learn. Eventually, those basics take you a long way because you've seen it before. It's just like in the ring. Ain't much you can do when I stay in the ring sparring. When I'm always training, I've seen this before. Mute
That's
somebody
good.
there.
I
All
feel
right.
like Angie always be in the ring too, so she'll get
Word.
that. Yeah.
The more you drill it, the more you drill it, the more it becomes habitual.
Mm.
So if you're always drilling on the bag, just punching, when you're in front of your opponent, you think it's just you punching, but you didn't realize you were supposed to be working on your defense. Because when the opponent throw the punch back, now you get clipped. You thought you hit him 10 times, he hit you one time, and now you buzz.
That was good.
Because you get overconfident. So always practice how to hit. Practice defense between hitting. It's called built-in defense. So as the market goes up, I have to start to adjust, right? I like to sell into the strength. I like to sell into strength. I don't like to sell once the candle, oh damn, that's it. Boom, boom. And now it don't even let me. Now, okay, if it comes back to this level, all right, now it touches right here and boom, right again. So built-in defense at all times, and that way you don't have to get ready, you stay ready. So it becomes a habitual thing. Okay, I'm getting to the level, right? So this will become a habitual thing. Most people, damn, boom. So most people, right, in this context, let's just look at this context, right? These are dailies, and I'm on a daily, I think, right? On a weekly. So this is just for context, right? Let's say this is our top level. A lot of people, right, what they see is, okay, yo, we at the top level. Let me get in, boom, bang, right? But what I see, because what I see over time is this is a ceiling, right? What happens at the ceiling? We may crash and come down. If this is a floor, what happens at the floor? We may bound, right? Chances that we break through the floor and go down, that's a slim probability. Yes, it can happen, but it's a slimmer probability. Chance that we break through the ceiling, right? So when most people see it oh, we're approaching is bullish, I see this as bearish because we're under the ceiling. What is my first instinct? Not to buy, is to sell. It's to sell into strength. Watch for reaction and see what I'm going to do with my runner. This is why we move our stop losses as the run goes. Right? So that is just over time you build the context. But to build context is you have to watch the levels, watch structure, watch anything that it is you're watching. Never give up on your strategy. As long as you know that your strategy works, and as long as you know that you've made money using your strategy, as long as you know that the way you read the market makes you money, that is what you wait for to happen. It doesn't matter. This is most people do strictly break and retest. It broke now. They're waiting for this area to get retested. Right? That's just simple mechanics. And if I don't see that, I don't take the trade. Why? Because my strategy is break, retest. So now you could have resting orders here. Pick me up. Pick me up there, and if it come here, unload me another sum. Because eventually, this is what happens. Right? So it depends on the context that you read and what you see happen all the time. This is how you could give context. I can't give you context on certain strategies because I don't use them. While I know they might work for some people, I don't personally use them, so I can't give you the context. But when I can see something like this, I can say, okay, well, if the volume for the day is light and the candle here looks like this, all right, what else can I look at? Volume is decreasing through this whole 3 candle pattern here. So that is the context I understand. And now because I know, right, that we are at a ceiling and I already see different things with I'm pointing at the RVOL right here, right next to me, right? Because I already see all of that off the rip because it's something I can understand. And I can see that my 20 is sitting all the way down here, super far, extended. I can see this level being retested while my 20 comes. And this is what I want to see before I say, okay, we could possibly rip around this zone, reject, high, lower high, keep grinding our way down to key levels, right? Keep looking at the context. Where do you deem the discount? So now where Ab sees it, Trap, me, whoever, where do you see the discount? Where am I willing to pay for it where I see everybody else paying for it? Is my chance to bank here? Is it this zone? Or is it down here where I could unload? Right? And the price might not come for a couple months. But when it comes, this is what you wanted to see. Are you going to follow along with your plan? So that's the context building. It happens, but it happens over time. The more you follow your plan, the more you set the plan, just watch the plan. Watch the probabilities. This is why one plan never always works. I can't just always think, okay, well, this is my context, guys. So if we break and hold there, pause. I can't break down a stock like this because that is not context. That is only one probability of what can happen. Okay, guys, if we don't have this scenario and we do tip right here and we reject, right? What is my next level of interest? 300, right? Then here, because this reflects with this rejection here, that is a zone. So I need to watch for reaction here to the downside, to where the zone matters, where my 20 is sitting, or if we're going to try another attempt at higher. I have to read the chart. The chart is telling me the story, right? At the same time, guys, you know what? I might wait because this run is not safe. Just be patient and wait. It was a massive run. I mean, whoever was in it, shout out to Chop. Chop is screaming Apple since I don't even know 260s or 70s. So this had a massive run. Now, do you stay greedy in context, or do you start getting paid? Like we say in the motorcycle world, I got motorcycles, right? So when we go riding, when we see new people, is there's only two type of riders, right? And those that have been down, or those that are gonna go down, right? This market is gonna give you two things in this run if you was in it. You either gonna cash out and make it back, or you gonna get aggravated anywhere around here, sell your bag for less money, and the stock is gonna keep doing what the stock do. There's only two possible things once you're in a play. You either gonna keep your money, or the market gonna take back the money. Manage the greed. Manage the greed. Always manage the greed. Why? Because it's right in front of our face. So you be careful here. That's cool. The market can still run because this is how we fake out retail. Don't worry. Greed, he eating that lobster. We getting fat. We good. We eating good right now. So that's context. My bad for going on to that. Let me get back to my segment part.
No, that was real good. But what if we don't eat seafood though?
Or whatever it is you eat that you think is higher. And you feel me? Some people think instead of a what is it, the sandwich steak, right? That you eat in the bread, the flat steak, or you eat one of them filet mignon or one of them skirt steaks. You feel me? You either gonna eat that, or the market gonna take your money. You gonna have to go get that sandwich steak. Yeah, yeah. So that's where we at.
I was about to say I don't eat steak neither, but okay. I ain't feel like bagging it. Yeah, lunch.
Nah, but all right. So back to the important stuff. That I mean, that was very important. That's why I wanted to touch on that. And now that we got that one. So look, so this is what we're looking at here. This is context as well. Without reading a chart, you're just seeing how is the market pushing. Is it pushing like what you see here, or is it pushing like what you see here? This is just context. That's all it is. The Mag 7, right? Three of these stocks alone can keep the indice green, right?
Max.
Now, three of these stocks alone cannot keep the indice green or red. But in conjunction, if they're all as a team, they can definitely keep the indice green if the MAG is underperforming in this context for the week. Because that's where I'm looking at right now, right? So this is the way we use this. You look at the overall map. Obviously, this here, the bottom piece, is just giving you the MAG. You're getting your MAG 7 as your immediate important visual, right? And then you're going to get your macro structure, your gold, your oil, and your Bitcoins and Ethereums and stuff. And that's just important to see it there. And now I have to put this here because for data reasons, I can't show Bitcoin, like the actual Bitcoin and Ethereum. So I had to get backers that do. So, and the same for this. Yeah, futures is we'll get there, but that's definitely a different game and a whole nother scale.
I have a question for probably the new people that's just seeing your website. Why is SPY, QQQ, and DIA green, but we're getting like a hazard sign for IWM? What does that?
Okay, so the IWM. So now that's a good question because that is something that I did want to get into today. Now, look, everybody works individually, right? Because you see a divergence only on the IWM. This was created only for IWM, right? Now, IWM is like a market as a whole indicator. If here, this is small growth, right? And this is risk on, IWO, right? So now If IWO is running and small value is down, these are your smaller banks that give smaller companies, right? Loans, and you need interest rates to be low for this kind of action, right? If we start hearing about rate hikes, what's going to happen to IWM and the companies within? The risk off got to be fully off the table. Loans are going to cost more. Individual companies that represent the IWM, all these small companies, they go under. Charts tank because interest rates start to get hiked. And now their loans, the way they need to invest, cost more. Right? So that's why when it was zero money, when it was zero interest rates or whatever it was back in COVID, why you think everything just ran the way it ran? Companies just smacking the AI all over their name, was just everything was just running. Money was easy to get. Right? So now when you look at the broader context here, what you want to see is this. When you're looking at SPY, when you're looking at IWM, right? Right now, what I am going to do is, because I know for user confusion, I'm going to keep it in red with the hazard only for when there's a divergence. I'm going to keep this in red only when this aligns with divergence, meaning this runs, this tanks, or this runs, this tank. Risk off, and then I'm in safety. If I want to run up and risk, I get out of safety. I'm not worried about being safe. I'm risky right now, right? But right now, the whole market agrees as a whole, right? Whether this could be, we were expecting this guy Walsh all week, right? So the market is just agreeing. It's just agreeing. The big dogs are lagging. We're lagging for the week, but the rest of the market, the broader market, this is the broader market. This is your technology sector. This is your industrial sector, and this is your small cap, right? So if the small cap as a whole, say we were tanking here, right? And is in alignment that we're tanking, that means we're risk off, safety off, cash reserve. Investors want cash. That's what that context would mean. This context here, what I'm going to do is, what I'm going to change, just because I do understand the confusion, is this. Right now that the market agrees, I'm going to let this flash blue, and I'm going to put a sniper race flag right here. Market agrees, right? So I could just look at the context and break it week by week. I could say, okay, so what's happening for the month, right? Let me not get ahead of myself. What is the month doing? Now I see that even though for the week, even though I did get a sneak peek at the weekly view, I do see that the Mag 7 was lagging a little bit, right, in this week. But if there's 2 weeks, and this is the third week of the month, I mean, not too bad. Not too bad. The 1 week that we were lagging, okay, right? So we see how we end the month. But right now, the context is industrials is hot, right? Because this is the equal weighted Dow. This is the Dow Jones. There's only about 30 companies in the Dow. So the only way you can gauge the Dow is by getting on the equal weighted. So what does that mean? That means that in the Dow, the DIA, the way they weight price is by stock price. So say UNH, right? UNH is one of the biggest holdings in the Dow. So UNH itself, the stock alone, is 400 or whatever the case may be. Then you have GS. GS is part of the Dow. It's about $1,000 something. So these hold most of the weight. So when you tally them in the Dow, two stocks can literally run up the whole Dow because there's only 30 companies in there. So two stocks worth $500, $1,000, and such can run up the whole index. Three stocks can run up the whole index while everything else tanks. But the equal weighted, huh?
No, go ahead. That was good.
Okay.
That was good. I just wanted to...
So now the equal weighted, what the equal weighted does, oh, damn, wrong. So what the equal weighted does is you grab all 30 companies, but each one gets the same individual tally. Nobody gets an extra point because your stock is 1,000 and this one's 25, right? You don't get more percentage power that way. Everybody gets an equal weight. So if GS is red, you get 0 points. You get a 0. If a smaller stock in the Dow Jones is Deere or whatever it is. If that's green, you get a point. So now, just because you was one of the big dogs, but you red, and in the equal weighted, we don't gauge you guys like this. I don't care about none of that. I care about equal weight. Everybody gets one. You read today, I don't care about what you did yesterday. You read today, you get one. It doesn't matter how in your percentages. So it's equal weighted when you tally them. So out of 30 companies, if 16 are green, or let's say if 20 are green and 10 are red, now you're in your equal weighted, you're gonna show you got strength in the broader context of the Dow, right? In the industrial sector. Equal weighted, they're all as a whole, investors are it's equal weighted. The sentiment, it's equal. It's bullish, yeah, we bullish. Because it's not just GS and UNH. It's them other ones too. So that's what these divergences mean. It's the same thing here. This gets ran by the 7 big dogs. All it takes is 3 of them. 3 of them. Imagine you have all 4 just all red today. You'll pull this down. This won't be up no 8%. Right? So that's the power of the way that these indices are created. This is how they made them, because even the IWM is created from IWO and IWN. And these two make IWM as a whole. So when you see IWM just green, right? You got to see, okay, what's green in IWM? Stocks in the risk portfolio? Are we feeling risky today? Or stocks in the value portfolio? Are we feeling risk off? Are we fleeting to safety? So therefore, because the market agrees now, right, in this context, I will change this to blue because we're aligned. So I will change this to blue, and I will change this here, and this will only be the divergence if we're running in opposite ways. So we can see which way are we rotating to, right? You can catch a rotation this way, because now if let's say 1 month you're gauging it and you see it like this, but then all of a sudden this reverse for the month, this starts to push up. Then when you start going around in your weekly and you start seeing the divergences play out, now you see in the week today, let's say you have a bounce, right? A dead cat bounce, because we already looked at the higher time frame. The higher context is there is a rotation happening, right? So now today, right, as a daily, let's say this was running low and this was running high, right? So this is my chance to get in safety because it's a dead cat bounce. And I already see the divergence coming because I saw it in a higher time frame. Same context for all of them. So this, what this engine is going to do regardless, without me even having, I don't have to refresh this. I don't have to do this. I can just, if you got your charts on your other screen, whatever, you just leave this on, this is going to tally by itself all day. Every 15 minutes, this is clocking. This is clocking everything. And it's bringing it back in the tally. So it depends where you're clocking, where you're looking at.
One of the mags just went red too. Now it's 4 of them.
So now if it starts creating a buzz, eventually, if it needs to, let's say for the day, because you see, look, for the weekly here, you have Apple, Tesla, Meta. That's for the monthly. Then in the daily, see, it's not the same context, right? So today, these guys are trying to push, but they're not doing much. The rest of the floor is doing the heavy lifting. As you can see here in SPY, NVIDIA alone, right? Because this is the way they're weighted. So NVIDIA alone, right, is causing that divergence. Where you got the rest of the broader market trying to push, but one of the Mag 7, which NVIDIA right there is showing me, is the only one red, not 2%, but thereabouts, right? And because because SPY is so heavily weighted on NVIDIA. This goes back to your point that Ab was trying to make. When you just get into ETF after ETF, when you look at the metrics here, what do we got? Wait for my thing. Bang. A whole 8% of the whole entire ETF is concentrated on NVIDIA. The top 5 alone hold a 27% pricing power over this ETF. It's your top 5 right here. So you add all this up, just add to that one, bang, and that will give you your 27. You add the top 10, all the 10, you'll get your 38%. So now in context, is the whole, when you see SPY red, right? Why is it red? What are they trying to do here? Are they trying to trick me here? That's the context. Those are signals. This is what holds you from just jumping on trades blindly. Well, the market's been running all week. About to get in position this week. Nah, hold on. Where are you getting in position? Because as far as I know, for Friday, for today, I can tell what position is being sold off. But a couple days ago, somebody spotted some nice absorption and played out beautiful on. And look who's holding the market down. Well, I mean, it's not as up as it can be if it wasn't holding it down. So this SPY got a leash on right now. It kind of wants to run, right? But NVIDIA's saying, yo, hold on. Not without me. If I tank, y'all wait. Then if you have QQQ as well, guess who you own too? So now you down 2 for 2. So you got to be careful with what ETFs you start jumping in. Because, where is it? Google's not appearing, but they're quantum. They're quantum. Google's quantum. 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 I'm not sure. Don't quote me here. Very high possibility. And quantum. So yeah, okay. So now yesterday we get news, yo, quantum. Now we just gonna run up a headline. Gotta be careful. Gotta be careful. You gotta understand what moves certain markets. And if we're overweighted in one company alone, if that company, the company holds power, holds too much power. Damn, let me get back to the thing, man. I got sidetracked.
Levine, he answers your question, right? Basically, after. How come the QQQs are pushing hard, but SPY is moderate? They were at least 100 points apart for the longest. Now only a 20-point difference.
That's just the indices is gauged. QQQ has been running. It has all technology. It has some technology sectors that SPY doesn't have, because remember, SPY is the 500 most fortune company. In QQQ, you have 100 companies in there, and some of those companies don't belong in SPY. They're not in SPY, but the stock has been running hot. So QQQ moves with it. That's how you can see QQQ be catching up. That's why a lot of people look at NQ as the market leader, right? Whatever QQQ is doing between QQQ and industrials, that's how you know which way the market really wants to go. QQQ is fully risk on. It's technology. What moves the world? Technology. For I don't know how many years now. So technology is the leader of the market. It's where people are most of bets are there. Yo, what's the new phone gonna look like? Is it gonna fold? Is it gonna just pop up and like, what's it doing? What we doing? It's technology that's gonna surface that, right? Research and development. So QQQ will always catch up. right? It's just like SPY. Most people look at the S&P and they see that what is it 7,000 or whatever. So that's really worth more. There's just so many companies inside of SPY, right? That have split. Like Apple has split so many times. Apple's not worth just $300. Apple's really worth like a real one stock, one share of Apple is over like 9 bands. Don't quote me exactly on the number because I didn't look that up, but I understand that as many times as you have like a real stock of Tesla. Remember when Tesla first split, right? It was over 2,000, and they give you like 9 shares, 10 for one. Then it split again when it was at 1,000. So where's Tesla really at for one share when you really think hindsight like that, the whole broader what it's really worth, right? So that's how you see these companies have split so many times. So you see, oh well, SPY, the S&P 500 is really bigger. Even if you think the number looks smaller, 500 most fortune companies belong in SPY. They do not belong in here. You gotta qualify different for this. So, but that's why you see QQQ can always run, and it can tank as fast as it can run, because that is full risk on the table. Where's the new robot at? I'm betting on it. The taxis, all the AI stuff now, boom, all this technology. Yo, who got the faster server? Who got the software? Who got the chips? That's all technology in a broader market of technology. So then you got semi, software, you got different parts of the sector. But it all falls under the umbrella. So QQQ is always going to be a big dog. It's always going to move, going to lead. So do we have the basics on the market overview board? Just when you come in here, you could say, okay, I see what's going on. I click, I look down the time frames, and I could understand what I see.
Based off the comments, yes, Rams. That was
Yeah.
They're enjoying it. That was good.
Word. All right, so now we're gonna go to, because the chart now, which what I'm gonna try to do is use the chart more. Oh, I gotta sign in. So I gotta try to use the chart more because I'm trying to make it comfortable for myself to use with certain tools. The tools are not all playing nice yet, but I will sharpen. So now, basic on the chart is before I skip, because I skip on the control bar right here. So right here, you're gonna get your quick options, obviously, and then don't forget every time. Let's say if I'm looking at QQQ, I could be looking at IWM, could be looking at DIA, gold, whatever I might be looking at, right? But the moment I come to SPY, we have something special here for you. You click right here, bang, bang. So don't forget, if you don't got your calculator, your risk.
Oh, my bad.
So this is what you're gonna want to see. You're gonna want to click that, get your risk council, get your risk calculator, and get it on and popping with SPY. So the tab is right there for you. Anytime you click on SPY, you could be looking at Tesla. We're not gonna blind your eyes with on it, but if you're looking at SPY, that is what the risk console is made for. So you guys get your game on with the risk console. And now, as far as the chart, I'm gonna breeze through the chart and then get into more details on the support and resistance cards, because this is another feature I feel like you guys are not totally overlooking. But in this simple card, there's a lot of information happening at once, right? Context. I could look at the chart like this, and I don't even have to zoom in, right? I could just look at it like this, and I could just start reading. Damn, I messed it all up. I could just start reading my context, right? And off my card. And then once I get the context off the card, okay, now I could browse at the chart, right? I could do either or, but I could confirm, right? And get extra details. So in the chart, you could have the daily levels, right? Now, if you wouldn't be signed in, if I wouldn't have been signed in, I wouldn't have been able to see this. Or when I click on my weekly levels, they won't pop up. Or the monthly levels. So these are dedicated for your longer term swings, leaps. These are the levels you want to look at, right? Or you want to see how much room do you have, right? So, okay, is my 200 after your context? How much room does the stock have between resistance and support? Can I trade the edges? Maybe so if the compression zone is wide enough. If the compression zone is very tight, I might want to wait, right? So this is all context, but it's all your monthly levels, your leaps, your deep swings. Your weekly levels, this is where you use your mid swings, right? Even up to a good 6 months to 8 months. This is what you look at, these levels, right? These are your midterm swings. And then if you're a day trader, if you like to look at immediate levels that now in your dailies, this is very good to get your. Sometimes I put these dailies on, and every day you might have a zone that might shift a couple of cents because this is tracking highs and lows, and it's fetching back patterns on candles. So this is getting you the most accurate level. So the dailies can shift day to day, not by a dollar or two, but by a cent or two, depending on where the levels are going to. Now, you're still going to have your 745 area. So I won't change my daily level that I'm looking at for the week every single day if my level is still respecting, right? If when I already looked it over on Sunday or on Monday, when I added my levels, whenever the day was, and my level's still there and it's still respecting, that is my zone. That is my area. And I still see that when it updated at 9 in the morning, I already see, okay, I'm only off 30 cents. So this is my whole zone right here. I'm looking at the structure. Nope, I like this structure. I don't like the cent. But this is your reference. This is for day traders. This is for quick trades. You don't overstay your welcome on daily levels. These daily levels get touched, and these are grab and goes. These are grab and goes. You don't just overstay your welcome on daily levels. That's why they're daily levels. If you went to a 15-minute frame, you don't put levels over there and just rock on for a week on that play. Those are 15-minute levels. You already hit all that. So now that's the chart. Very simple. 20 SMA. You click on these tabs, they disappear. You could even click on the support and resistance line right there, and now you have just a bear chart, right? If you just want to look, if you want to add your own support and resistance, you could come here. You click on that little tab right there. You drag it to where you want it. That's a structure point that you want to put. You leave it there. That's another one that you might like. You leave it there. That's another one you might like. You leave it there. Let's say if I want to leave it at that, I'll click on the button again, because if I keep clicking, I'm going to keep making lines. So now I could look at these. If and when, right, anything were to happen, right? We reject off this double top or the whole scenario we mapped out earlier. Now I can see. Now I have one more reference. All right, what's the website saying? So now I know that this structure point that I just mapped out that I'm looking at falls between 733 and 730. That's a zone I might want to pay attention to, right? If we break this area of interest right here and right here. Now I know this double top plays out right here. Boom, boom. Now I got to watch reaction here, because from here, see a gap right there. There's more downside. Break here, more downside. Structure by structure, level by level. Now I start mapping out. So now when I go on my weekly, all right, so what's the weekly saying? Damn, okay, so the weekly, this little chicken scratch I made right here actually landed at that 722 where I said, come on.
He got
Come
mad.
on. So then you got the 713, boom, right where we landed is another point of structure that for the weekly, I already know, damn, when things get cooked right here, I already peaked that we made a high, lower high. If we can't reclaim this quick, fast, and in a hurry and get for more blue sky territory, now I see this whole path as a higher probability path. So very, very powerful. I'm trying to make it. It's very simple. Now, this is one thing that really gets to me, that it refreshes like this and goes back. And I really don't like that. So I'm gonna work on this. It really pisses me off. But now, again, back to the support and resistance, because now this is where, so you're gonna think of this tab as your GPS system for the stock's price, right? So instead of just telling you where the stock is literally, right, at the moment, it's going to show you all of your floors and your ceilings, right? It's going to show you right where the prices are likely to bounce, right? This is fully mapped out. The engine searches. It backtests this level for over a year worth of data, right? Before it spits anything out in here, any of this information, anything out. This is the whole thing is doing a whole back test on every level just to come up with the probability of the strength on each zone, right? If the win rate means it broke through, it broke through. And whether it's support, if it's support, that means it's a floor. If that means 80% win rate, that means chances are that if we get to that floor, we could break under. That's what that means. Same thing over here at resistance 2. If we can manage to get here, right, we can possibly keep running. Why? Because now this is blue sky territory. So strength begets strength. So now you got a slight 63% that you might be able to bust through, right? And that's just back end feeds that it does. And I don't want to get too crazy explaining all that, because with all this chat GPT, people can easily copy paste things. But that is the logic behind it. That is all this stuff is not made up. The script doesn't guess it. It backtests. It does backtest before it even comes back. If these levels start to change, it's gonna start backtesting those levels now, right? So now, let's say you're looking at a big run, right? Let's say, well, right now we've been losing steam, but let's say you were looking at a big run. So you see the volume was light. I'm on a what? On a 1 hour chart. So 1, 2, 3, 4, 5. So all this is today. This started going. But now we ain't break through the level. Why? Volume's been light all day. So I'm giving you the whole volume map right here. Your relative daily volume, what's going on today versus what happened on the last 20-day average, right? If 20-day average is 47 mil, and then you come to me and tell me, well, this is my, oh, damn. If this is my 20-day average and today this is all we got, you light there, little brother. You come in a little light. This is a little shorter than a midget with no legs. So now I got to take that serious, right? Because now what I'm seeing is I'm at a ceiling. I'm right at a ceiling, right? And then this ceiling is literally that far away. What are the chances? The chances is we might try, reject, come, reject. And then this becomes a point of interest, right? So this is how you read all the context. This is also, once you're looking at the context, right? Depending whether you're looking at your daily levels, whether you're looking at your weekly levels, at your monthly levels, depending on the strategy that you're using. What is it that you saw? Something on the weekly? Cool. Now you could enter on the daily levels, on the hourly, refine entry, but now you ain't gotta go crazy over every little, it's a weekly level, right? So let's say you go down on a little drawdown, I don't gotta panic. This breakdown, this analysis came from my monthly and my weekly. It comes from long-term structure to key levels on my higher time frame structure, right? So now I could just sit and chill. I don't gotta wait. I don't gotta watch this every single day, every day of the week. This gonna run. Give this thing about 30 days. Watch this thing go. Right? Because 30 days on a weekly analysis is 4 candles. So this is where you get a 2027 lead. But you don't do analysis, right, on a daily level and get a 2027 lead. Don't make sense. You ain't going to stick around that long. But if my analysis is here and I'm gauging on my weekly analysis and I see, right, this is a very important part right here. This is gold right here. Your time frame alignment, right? So when you see this is 2 time frames agreeing, right, that the levels are in the same vicinity, right? This price right now, it's literally 0.33% away from the spot price right now. This stack at 730, what were we saying earlier? We see a lot of puts being put at 735, 730. We kept going on the line. But now when we look at the site, what's she telling us? Oh, damn, I gotta remember. Boom. 2.13% away from the prices down now, right? And that means that this 730 is a high probable zone because a weekly level and a daily level agree. They sit right in the same neighborhood. So now we got to watch for the reaction at 730 because if we lose that level, which is a stack support level, which should hold as a floor, right? If we break under, that's going to break under and it's going to get ugly. That's when we're going to see the 725, 722.20, 715 possibly. So the 730 is very vital here. Then, like Ab mentioned, he was looking at a top of 750. But then what we got right here? We got a resistance stack where the weekly and the daily both agree that 748 to 749 and some, nah, that's the roof. So now you take those prices serious, right? Because where did price go? It wicked right here. 749.83 to 90. So 749.38, 748.52, reject it, boom. So you take these levels serious because it's showing you on a daily and on a weekly. These whole weight, they're not intraday levels. This will be a 15-minute time frame, right? 1 minute levels are these bar by bar. That's your 1 minute level. Practically, because when you break it down to the 1 minute, you see them spaced out. So this is getting overlooked, and there's a lot of context happening here. It's telling you the nearest zone, right?
Hey, Rams.
Yeah.
Angie has her hand up for a question.
Oh, what's good, Angie? You could just get right in.
I didn't want to stop your flow. You was cooking. So question. I use it a lot, but I'm underutilizing it. So I'm noticing that. But I'm looking to plan some exits on some of my semiconductor plays. And since they're leaps and like deep swings, should I be only focusing on like the monthly when I'm plotting my exit, or should I, because I scaled down and I'm looking at like the daily, and so I've been looking at it every day to help me plot my exits. But now I'm wondering with the time frame, am I looking at the wrong time frame?
So now look, I use the monthly for structure, right? For long-term structure. But the weekly is where I would say where the sauce really lies, like those levels right there. So if you do get in on a weekly level, you do have to give it some some elbow room, right? So now you could say, I don't invalidate this bullish thesis until we break under this level. It might be 10 points down because you're on a weekly bar. Now, you could
Mm.
split that into a daily view and say, you know what? I can break that $10 point because on the daily here, I see that if we invalidate at around 7 points, because you might see it on a daily level, something that you might not like to see. If we reject here, on the daily, this might invalidate me, right? But if you are looking, you have to be careful. If you're entering off a weekly, try to accommodate your risk to that weekly frame. So that's why sometimes it doesn't make sense if you're getting. That's why the risk console is gold, because a lot of people do over spend on a play versus how much money they actually hold in the account.
Mm.
And sometimes you might get on a weekly level, but then you're on a drawdown. This could drive you emotionally crazy, right? Let's say if you're not watching the risk of the total money you have in your account, you just jump in a $4,000 play, and now you're down bad. But in your weekly levels, you're like, damn, I jumped in the weekly, but I took my stop loss off the hourly. You get taken right out
Mm.
because a weekly bar is gonna run through hourly bars like it's nothing. See, this
Mm.
is this is something I do not to even get sidetracked, but just look like all right, it's right here. It's in QQQ already. I just think no, took it out. Oh, it's right there. So you see, look. So I got the weekly bar there. I got the daily bar there. I got a 4 hour bar there, and I got five, right? So I could just see a little more context on the hourly. So now I could just chill on the 15 minute. I could chill on the 30 minute because now I
Mm.
see what's going on for the week. I see the week, it went, and it went rejected heavy. Although still bullish, this started out very bullish. It just went, and now we rejected for the week. So that's the context. Most people, if you're just looking at the hourly, you're looking at an hourly context, which is this is structure, right? This could be structure for the
Yeah.
hourly right here. I can see it right here. So if I were to add another 2 bars, I could probably see another 2 hourly bars here holding a structure up. So we can bounce here on the hourly, but in the higher context, right? In the higher frame, the daily, just fully rejected today. The weekly, we started off strong, we lost all type of steam. So just by
Yeah.
right here, I don't even have to go back and forth. I already have, let's say, if I already did my weekly analysis, now I say, all right, well, if you get on your weekly bar, you got to see who's under it because where did you get in? Let's say, right? What level of all these weekly levels here did you get in? Because you see
Mm.
from here to here, this is why in the site, when you click on the week, the levels expand, the levels that matter. Because here on my weekly, my daily levels, look what the weekly bar did.
Right.
And then honestly, if you do the ADM, because I know I think you do the ICT stuff, so you can see when it does the whole boom, boom, or boom, right? The whole accumulation, manipulation, and boom, distribution. So you can see that by just having I know you can do it with just sitting a 4 hour. If you were day trading, you could have a 4 hour bar just sitting there and just watching structure develop on the 4 hour and watching how structure is developing on the 5 minute, 15 minute, depending on what your trade intent is, right? Because if you're day
Mm.
trading, you have a 4 hour sitting there and now you see, all right, so the 4 hour started off low. All right, what are they doing? Or it's starting off like a whole doji. What are they doing? Accumulating. It's going up, down. It's just ranging. It's just ranging. Then all of a sudden it snaps to the downside. Oh, damn, what are they doing now? Oh, manipulating? All right, maybe it's manipulating right now. And then all of a sudden you start seeing it shoot up, but you already got the levels on the lower time frame if you was day trading. So now, oh shit, manipulation. And once you break the key level, bang, it goes. But you already got in because you saw it coming because you had the bar live there for the trade intent.
Yeah.
It don't always have
Okay.
to work, but as long as it's the strategy you follow and you could understand that manipulation, distribution, boom, oh, that's what it's doing. So you could use it in multiple ways. I don't personally use it as such, but I do try to spot it sometimes just to train my eyes. But I do use this setup just so I can see from a longer perspective of the candle of what my 5 daily candles are doing, right? Then I could see here on this daily on what 6 hours are doing, or my last 30-minute candles, however many that is in 1 hour, are doing, and all that. And then I have the 4 hour candle right there, which is about two and some change in a day, right? But they're powerful in futures, your 4 hours. And then I have my hourly context, and I only do 5 hours. Because if you do the hourly, it doesn't align all the way. So boom. But you could do this to the 65-minute, whichever one you like. But I like to follow the hourly level. So I have 5 of them right there. Bang, bang, bang. I want to see what happened in the last 5 hour context if I'm chilling in the lower time frame. Once I start looking at bigger time frames, then it's all good. I don't pay attention to the context here because I'm already there. So you see everything
Now I
just
get
it
that with the
default.
entry. My thing is trying to
Yeah.
like as I watch it on as I watch my longer plays, I watch them on a daily so that I can see if my thesis is invalidated and I need to get up out of there. So I was
See, like
wondering
right
like
here,
if I need to
if
move
you
that
would have
up.
got in, if you would have got in somewhere
Yeah.
here, you say you invalidate down here. That gives this elbow room on the daily, right? But this is a whole $20, $13 drawdown. So you have to be willing to risk,
Uh,
right? You gotta be
yeah.
willing to risk that because the analysis is, yo, I'm after, right? So if you get in around the structure, so you gotta be willing to risk that to try to get the move, right?
Okay.
So how many times can you fit this in there? A couple times because you did this and in the hourly frame, but I have to be willing to risk this much from
Right.
the weekly, right? Because if not, then my analysis, why am I in the weekly if this is just gonna be a quick bang bang? All right, weekly, I'll use it for structure. Structure is bullish. All right, let me go on the daily. Let me break this down to the hourly because I'm out of here by tomorrow, the next day, the latest. Because this is only a week, 2 week play. But if I'm looking at the weekly context, I'm planning on banking on this play. So even if, yeah, we could get a little drawdown at first, that's okay. Because now, boom, we're running. It's weekly context. Is what where you made the analysis. So it does give you a little more room for your risk, but this is where it's a leap, right? I'm down 20%. All right, I'm not gonna go crazy over it right now. It's a leap.
Right.
Let it cook. You feel me? My analysis, if it invalidates my point of structure, all right, now if we break under, boom, and now you do ICT, so now you start seeing your imbalances here. If I order block, so now don't sell right where you think their buyers are coming in. So now where your entry gets invalidated, boom, get out. Because then all you're gonna do is get out with even more of a drawdown and then end up hopping back in on the run up. So be willing with the risk off the weekly, just because it's the context that you're going, is your blueprint.
Gotcha.
It does
Yeah.
carry a little more risk, but this is the risk we take for that bang on the run that we just analyzed. So if it comes to the structure, bro, boom. All right, that way we staged the buy, right? I made a buy on Netflix. I haven't bought it again because then it ran up to 90, then it came back to my entry price. All right, cool. I say 85 some, I said 82 some. Let's see what's up. But then when I start seeing certain prices, now I'm like, okay, lead time. Let me get my foot in the door. Let me buy 2 contracts. Just let me boom. So now you start entering where you said you would do business, where it makes sense for you to do business. So if I'm gonna do business in this candle, I gotta be willing to take this strength out. And then if I'm gonna do business in this candle, now I gotta say, damn, do I want to do business in this candle? Because if I follow certain ICT terms, and I know I might not trade them, but I know other people are looking at it. And if there's an imbalance here, right, and people are looking at these fair value gaps, somewhere around here or whatnot. Now I got to be willing for price to crack all this.
Mhm.
So now my stop loss just starts getting bigger and bigger and bigger because depending on what I'm looking at and where I'm entering, it can play against you because on a lower time frame this may look like a move, but on the weekly now it's yo, we getting overextended. Where should I wait? So I can place that stop loss because now if I get in here, I could get under this trend. Now it's not that bad. But now if I don't see this happen, I can't get in.
Yep.
Because now if
Appreciate
it
it.
comes
That was
down
good.
here, there's always that chance. It leaves you with the chance of, damn, it never collected. So now it's running again. Well, this is where we train all right, well, I'm not going to chase it. If I can't see any of the probabilities that I mapped, any of the entries that I mapped, I'm not going to get in because I think I said it. I don't know if it was last week or 2 weeks ago. I look for my invalidation before I look for my entry. Once I have an invalidation point and a place where it seems where I can hide good enough for the trade intent that I'm gonna do, that's when I say, okay, if this is where my stop loss is gonna be, that's my invalidation. Now I can start looking for my entry. As soon as we hold that level that I like, as soon as we break above it, as soon as I see what I want to see, I'm on there. So that's how I would gauge it, but it just really all depends on what you're looking at and what candle you got in. I didn't mean to get too crazy. No app is over there like
That was dope. Thank you. I
Oh, do
appreciate
your
that.
thing.
nah.
It's 3:54. What we got? What segments we got left? We got 2 more left. I gotta get my kids at 4:30.
All right, so I'll just do a quick speed. Don't worry, I want to do a big video on this anyway, right? But and this is just to refresh everybody, and now before everybody tells me, I know I have a meeting scheduled with Bar Chart. I think it's early next week, but something I had to email them something about. See, I am not getting the data inside the small cap here. So it's really, really, really pissing me off. And I have to get a little nasty over here. So because
Uh, so
that
surprised.
includes yeah, bro, they piss me off. That includes software here in this IGV. See? So now I can't see the map. So now this is holding me back. So I really don't like that. But now we're gonna get that solved. This is gonna look just like this. You were saying something, man?
No, my bad. Go ahead, bro.
Oh no. All right, so look, in the market heat map, it's this is gonna flash just this everything in the site loads by itself. So you really don't have to do the refresh. You can do it if you want, if it makes you feel more comfortable, but you don't have to. Every card I have it to refresh on its own. So you'll see this one refresh like by itself all the time. You might be looking at it and then all of a sudden bang, that thing just start refreshing because it's actively looking.
And it just came out of you, boy. He said, blah, 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 blah. He started running. I don't even know what you said. No, I'm playing. I heard you.
So boom, right? So now if something's really hitting, it's gonna be flashing, right? So if IBIT Bitcoin is on is flashing red. If semis are flashing, damn, this is hitting. If SOXL is hitting, it's gonna give you that heartbeat flash. If it's just neutrally green, it's just gonna be green. You'll see the sector and why. You can break it down here. You could do all. It'll pull out all 500. I leave it at 50 just for optics, just to see. I like to look at the top 25. So you could start looking at the map, what's going on here, what's going on in value. Oh, so this was the IWM thing I showed before. So you could start looking at all of that stuff and see what's going on inside the actual indice, right? So then this is just for your heat map for your broader context. Like, damn, yo, Cat still ripping. Damn, Microsoft still red. All right, let me go see what levels Microsoft. Let me see what deals they trying to give. Like, oh, UNH had something happen not too long ago. Let me see what they've been doing. So you start seeing like, damn, they've been cooking lately. I haven't been looking. So now I might give you something to put your next scope on and start watching, right? So then you'll have on the side of it, you got the flow scanner. This flow scanner right here, I love it because so I made it have a streak. So not only So this is in every website. We'll get into that in a second. This will take me quick. But this, right? So this is not just gonna pull you out little garbage stocks. This is gonna pull out where actual big bread, is entering the tape. This is all big money. So now, one thing you want to look at, right, is when you see these little golden numbers. That's your relative value, right? To the pertaining ticker. Okay. So now if you see that it's gray, it ain't that crazy. It's still above one time, but it's not whatever. But if it's gold, that means it's above 1.5 times its 20-day average in today. Then you're gonna notice you get fire for your daily streaks, right? If they just running hot and profit in green. So now Qualcomm has been on a streak. It has made this board for 3 days straight. So now you say, damn, big money's back in this. Like they really getting in here. Like, damn, RGTI. Why? The government's backing all these companies, blah, blah, blah. Look what happened with Intel. They're not gonna catch me 2 times in a row. Nah, hell no, I'm about to get boom. So boom, look at all this money just getting dumped in all these quantum. That's quantum, yep. CRDO, I don't know, correct me if I'm wrong, but it could be. I think I don't know. I think so. But then now you have your daily streaks, right? So 3 days, 4 days, 3 days, 3 days, 3 days. So, okay, you appear one day, I might look at you. I might, yeah, you all right, cool. But you've been here 3 days, 4 days? Okay. What's going on? What level did we hit? Was this a major demand zone that we hit? I missed. Damn, I might want to. Damn. Okay. So now you start to fish, right? So same again here. Same thing reversed. Same thing. Same story. You're gonna see what big money's dumping. Then not only are you gonna see what big money's dumping today, you see if they've been dumping it at a high rate. Right? Big money. 29 times its average? Hold on. What's going on? Right? So then this is getting dumped. 4-day streak. Sellers could be getting exhausted here. Let's see what's going on. But it's still a 4-day streak. 3-day streak. 3 day. 2 day. Boom. So you're going to get these type of, so now you can say, okay, well, if they dumping this money on this because the big bets are over here, all right, let me see. And then if you like to play puts, you play downside stuff. Things that are actually getting paid to earn downside. So you have a map right here of who's really lagging, how much money is really leaving the tape. Same thing for the top side. This right here is going to give you all the market leaders of the day. But this could very well be, just like it shows here, you could find a diamond in the rough. For sure. Like, you never know. I've seen things pop up in there, and then later I see in the news, and I'm just like, damn. But what happens is, if this is a $3 stock, and you go up $1.50, now this is why you're a market leader today, because you went $1.53, and in your market cap, right? Damn, I covered the whole thing. And in your market cap, it shows that $1.50 is a whole 83% to your whole. You can't trust that. Liquidation event. People are gonna run after, yo, this is up 38%, this is up. So now you start seeing, yo, hold on, I already see. Let me go look. I'm about to short this to the ground. I'm about to hold on. This much for this? Does it make sense? What's up, bro? Give me 1 second, man. Let me my son wanna what's up, bro? You gotta give me like a little bit, like a 4:30. Yeah. All right. My bad, guys. All right. So this is how you can find diamonds in the roughs, up or downside. If I understand that this could just be a liquidation event, or this is just buyers getting tricked right here, and if I want to go look at the chart and see what's going on with this 83%, is this sustainable? What was the news? Do I believe this Now, maybe this is going right back to $2.52. So now just by looking at the board here and seeing what is popping up overall, right? Because this $3 on this stock was 52% of this. So right now, this move here could be brewing, and what just happened today here. Lose 50% of that 83 real quick. So this is where you get more little jewels. If you're just browsing around, going down, you start seeing, oh damn, something that might catch your eye. That's why it's there. Then the confluence board. I'm not gonna get too crazy in that because we're a little time sensitive right now. But in the confluence board, it's so it's all divided into sections. You choose the sections that you want to pay attention to the most, whether it's I'm waiting for this spike to this. Now, if three of them agree, let's say this was bullish right here, and three of them agree, that might be all you need if you're good with your structure, your simple moving averages, and your level agreeing. If structure is pulling back and your floor is right there, and you see that we're about to bounce in one of your main moving averages, then you agree with the story that's going on here, right? So then now, okay, I got the context on the hourly. Now I go to my 15-minute chart. I start mapping out my levels. Now I'm good to go, right? And you could do the same thing through every time frame. Say like you wanted to look at your weekly, like Ash was just saying, damn, I want to set up like a longer lead. Well, right now on the weekly, we're bearish. So now this is what you want to see. Okay, for the weekly, we're bearish. So now I know that structure is starting to turn bearish. Levels are turning bearish. My moving averages are still bullish. What's going on? Are we going to, in the lower time frames, right? Are the lower time frames going to start flipping over, right? Because see, from the higher time frame, structure levels bearish. Now I got my structure on the hourly starting to flip bullish. So now can my hourly, once I go check my chart, does it start flipping over onto the 4 hour? So then now the 4 hour starts to ricochet bullish here, or do my higher time frames ricochet everything into the lower time frames and just knock everything off the boat? Right? So this is how you read confluence. Now let's say if I'm looking at a leap, I'm not gonna be looking at the confluences right here. I got no business here. I gotta look, if my weekly is telling me what I want to see, I gotta look at the lower time and see if one agrees and the next one has an entry cooking for me. If I'm looking at a day trade, I might look at the hourly and then now down below and just follow each. This here, I have the RSI, MACD, SMAs. This is like your momentum indicator. So these are all momentum. So if the RSI is saying this, or the MACD is saying a reversal, or your SMA is looking bullish, it's starting to point up. If your daily, this is the daily VWAP. It's not an anchor. It's daily from when the market opens to when it closes. So if on that daily VWAP you're above or below, or your volume is spiking, is I took some from here and I put it into here. So now if 3 or more things align, right, it'll start marking you bullish, right? But as long as things do not align, if you have 2 things aligning, 2 things not aligning, and 1 thing barely getting to a certain alignment level, it's just scanning. It's going to stay scanning until what it wants to see, those momentum indicators start to agree. They don't all have to agree, but at least 3 have to 100% agree. If 2 are fully confirmed and 1 inside here is still triggered or scanning, you're going to have scanning. It's still neutral. So that's the way that works. Structure is structure. This is mapped to the daily structure. So it's going to see, once you go check the chart, you see, all right, where am I on the daily structure? Where am I in my, what was my last high? Where are we traveling down to? Is that floor meaningful? Then you have your SMAs, which we all study the SMAs. We can't stop drilling it enough in the group. And then for the scope, this is derived from a script that I have on TradingView. So in this scope, I get volume, very high volume demand and supply zones, and structure levels, but it's all based on volume levels. So when it's strict, it's going to get over 2 times relative volume level. So you'll see this, and more chances than not, if your strict is on, this is going to be scanning, because it's only going to look for A plus setups only. It won't let an A slip in. It won't let an A minus slip in. None of that. So it'll stay scanning until the script sees the high volume node and the price reacting there. So there's one thing where you could write it and you look for the sweep. So once it sweeps, that starts alerting the code, right? So on a high volume, very, very high volume node, it's ultra high. So now that's in your strict on. Once you take the strict off, right? So in the strict off, it's going to allow, say, the A minuses and the A setups. It will allow you to okay, look, this is evidence, but it's not supportedly super strong. So with the strict on, it's more conservative because you have to be more patient. Those levels probably sit at lower demand zones, right? So, or in order for it to be bearish, they sit at very high all-time high. So it's strict on will always leave you pending for the most part, because it's only going to give you A plus. Strict off, it will loosen the reins. And then you could just go normal, which is just going to trigger regular daily volume spikes and things like that. And if you don't care about certain strict rules, then that's fine. You could just go normal and it will still give you your context, right? So right now, where it's at on the levels is bearish, but the supply and demand in classic is telling you the bullish signal is triggered, is not confirmed. So in classic, it'll let even B pluses slip in. So you can choose to use it and play with it, look at the chart and see what time frame. It's very important. You got to clock the time frame to the trade intent. Very, very important. So, and then that's the confluence board. And now everything's down here as well. Everything's in the how to use confluence, how to use the scanner, support and resistance, the market overview, the flow, and of course,
brother, the channel. You feel me? You click right there and it's going to take you right home. Just click right there. It'll take you right home. And then what else we got missing here? All right. So then you click on briefs. It'll take you straight to the confluence board. Just so you don't have to go crazy. You could search whatever you want in there too. That's why I put the control bar. And also I did add, if I were to search SPY, bang, come on, bang. If you're looking at SPY and you're in the confluence board and you still don't got it, don't forget to come and grab your risk counts. So boom. So that's there too for whoever forgot to grab it from up top. Now, what else we got left? We got the flow. So the flow, I'm gonna do this very brief. Gotta take my sunshine. All right. So in the flow, you can choose the neighborhood that you want to look at. You could look at everything, at the blend of everything. Now, just make sure you have your sniper mode on. Without your sniper mode on, the context is gone. So if you just want to see the inflow, right, you could just sniper mode off. Let me just see the money that came in, out. I just want to see what's going on and see who's whose money is leaving and whose money is coming in. Let me see how they stepping. But if I have the sniper mode on, now it gets ranked, right? So this goes and reads through the support and resistance script. It does a whole back end search. So now sometimes you want to give it like a minute just to make sure that it's, for the most part, I have it coded like this intentionally, right? Because I'm trying to watch and see the best way to give you the signal without giving you a signal. So that's why even if something might align, it's hard coded to for the most part to say wait. Wait means developing patience until edge tightens. Now it's your job to get the context. We have inflow here in UPS, right? This moved up, but you see how it's colored in red? That means there is a resistance near this. Now, when I look at the context, now I see we're near a weekly and a daily level. We're near resistance 3 on the daily and near resistance 2 on the weekly. Now, when I say I look, I say, okay, now I'm looking at the breakdown. Okay, the weekly is near 0.3 away, the daily is near 0.2 away. Now you have to be careful here because this is a hard ceiling. A lot of money went in there to get to that hard ceiling. What do we do from here? So now you see where the context lies. So you see, okay, do we break over and this run just continues? It looks like it got money behind it. So now I got to go and watch these zones. I got to go and watch these zones now. I got to go back to my chart. I got to see what the zones are. I got to go map them on my chart, and I got to watch these zones for a break and retest, for a break on high volume, spike volume. How do you want to watch it? How do you see it? Where's your entry? Boom. But this will give you the context, right? You can also tell it, all right, well, let those A's flow in. Or you could say, nah, just give me the elite. I just want A plus settings. Look for A plus, whatever's around. Look for something that makes sense. Look for something that got a chance, right? So now it's going to start doing the whole fetch again, right? So now you see how this is green? Google's green. That means it came down and we're sitting at a support, right? We're near support 1, near support 1 on the daily and weekly. So now you see, okay, now you start doing all your math, everything we've been learning through the site. When you start looking and you're searching, doing your analysis, right? So let's say you was already looking at Google and you said, damn, the RVOL was light, like today, like, I don't know, like, boom, boom, like the structure looks, I like where it's at though. I like that floor, like, I don't know. And then you keep looking and now you see, all right, well, RVOL said it was light. That little negative, boom, I like the structure. We're right at a weekly support, at a daily support. Hold up. Maybe this could turn into something. Now I have it scored. So the score is 48. The score is not big enough to get it. So now why? Because the script determines that the outflow strength is low. So you can't sell into this and you can't just buy here right away because you don't know if we're just going to reject, right? So there's different ways that it does the score. So now it's always developing the score. It's always reading. It's always reading all through the day. So now you could just sit here again, like you could refresh. You don't have to. Now, what I did do for this, because this does hold a lot of data. So now you could click this on, and every 120 seconds, the window's just going to refresh for you. It's going to refresh for you. It's going to refresh for you in whatever you're looking at, right? Whatever universe that you decide to be looking at. Now, you could say, just show me 50. You could say, show me 25. Don't give me too much noise. Or you could say, give me 100, babe. Give me a full 100. Don't even worry about it. So then now, boom. And then you could do it, just give me gainers, give me the losers. If you're going to do it, always rank it by flow. So it's always going to be the biggest flow to the smaller. So this is a little sniper tool that is just going to keep you. Cool, I see this run. Let me see if it made the board. Where all the big money went. Okay, Meta doing this. What's Meta doing? Score 46. I don't know. That run is not looking too prime me to keep running it up. It don't convince me. RVOL was like this was so now you just doing your top to bottom process. Now just to not take too much. And then what else am I missing? Okay, weekly zones.
Yeah, I gotta. Let me
Yeah,
just.
I did too.
I gotta go in like 5 minutes. So let me just say what I gotta say so I can hurry up and go
Nah,
get
that's
this
fine. Go
done.
ahead.
Um, we're not doing the watch list. You could show them real quick though where it's at though.
Yeah, I'm gonna show him where it's at because I'm gonna have to step out too.
This rabbit hole about to be crazy. You about to show them?
Oh yeah. I thought you was about to do something real quick.
Yeah, I just want to finish off. I just have a couple things that I've seen that I just want to say before we head into the weekend or week.
Right. Watch list. Dang. So it's on the main tabs. Boom. Watch list. Click. You're gonna get this window. Right now we got 12 sitting on the board. Boom. With the best performer. That thing's been on the tear. I seen Freddie looking it up this morning. I know what he was doing. Freddie's great hands.
Golly,
Mm-hmm.
it got
Mm-hmm.
percent yesterday.
Or,
And how NEE?
and
Um,
that's the worst. Still
oh
10%. NEE, that's the people that bought
yeah,
ain't they
that's
just buy Dominion?
I'm not sure. Nextrogena.
Yeah. Yeah, they're the one. Yeah, Nextera. I think they just bought Dominion.
Oh
So
shit.
that's an infrastructure. That's an infrastructure play.
Yeah, that's the part. That's I got that as a phase two. I just didn't get it because I'm in SLB, but I might add to it. It's $1 away from my entry. Well, it's less than $1 away from my entry.
Nice.
What's so you want to show them screener, and then I'm gonna just run through what I gotta run through and then head out.
Well, the screener, okay, yeah, the screener I could bang this out real quick. This is quick. The screener, super easy, guys. Let's say you want to see this is your relative volume. This is what we were learning from the support and resistance card. Let's say, just for example sakes, I want to see what minimum volume of $10 million flowing today. At least give me a 1-for-1 on daily relative volume, right? So I just click on the 1, I click on 10 here. You got your choices of how much money, how aggressive do you want to get, right? So 50 billion, you might not really get too many companies popping out on that because that's a lot of money going into one company in one day. But let's say I'm just looking for 10 mil, relative volume 1. I'm looking at the S&P, show me a limit of 50 versus 100, whatever you want to pick there, however much you want to scroll is up to you. Any trend, bull trend or bear trend, you could see the money rank, which would be this, or you could rank it by momentum rank, which will be your relative volume. So it'll rank it by relative volume or by money. But right now I'm looking to see how much money was spent. So I'll run the scan on the SPY and see what pops up. Then I see that this pops up, right? So then, oh damn. Oh damn, I changed the. Then you scan, and then now everything that's at least 1-for-1 is gonna pop up right here. So now if I just wanted to look at either side, I would choose either side, then run the scan, and only that side would come out. So now I can say, okay, well, if this is regular, that 1.9% on a regular 1-for-1, this is a regular drop on any given day. 1.5 times more if you were to search that and something pops up, now you're like, oh damn, that sell-off got some steam, right? So you could just see what's going on relative to the volume. It's your volume scanner. You could do it by RSI too and give it more leash on the scanner and say maybe instead of 50 that pop up, only 20 pass. So, but that's the scanner. It's very simple. You can play with it. You got all the universes here. Again, if you do click on IWO or IWM, it's not going to show you right now because I have to solve this with bar chart. I don't know why they're doing that. I don't know what happened, to be honest, but I know it's on their end. It's not mine. But play with this because this is powerful too. This will tell you, yo, this sector is running. So, okay, let me go look at the sector. Utility, boom. You click on it, run the scan. Oh, yo, all that stuff is running on relative low volume. So now, okay, whatever the news said, you was trying to get me. So, but that's the scanner. Very, very simple. And that's it for the website. Much more coming down the pipe, but as far as every little nook and cranny, we did get to it. Obviously, fear and greed index is there. Obviously, if I look at a company like Nvidia, this will pop up. If I'm in SPY, nothing's gonna pop up. There's no institutional footprints for the SPY. It's not a company. It's just an index. So if I put a company there, then I might see some of this, but then there's no ETF because a company is a company and the ETF is an ETF. So if I have the ETF here, I'm going to see its constituents. I could come here, see the top 10 or see the top 25 and scroll. See the top 50 and scroll. 100, scroll, all scroll. And I could go happy hunt. But that is about it. And then there's the economic calendar, which I've shown many times. Click there to get only USA, apply, and put the most important ones, and then we'll see what's happening for next week. Easy. So use it. And that's all I got. Now, yeah, you could get to what you wanted to get to.
Is that jolts for next week?
Nah, I just probably hit the Jokes wasn't scheduled for next week.
That should just
No, that just
right.
that just happened.
Go ahead
was
and sorry, go ahead.
No, that was last week, I think.
Yeah, Jolts was like 2 weeks ago. I thought it was that's what I was. All right. Yeah, you could go ahead and check the comment section, Rams. They love the website, bro.
Appreciate you guys. That's a
Oh, it was one thing because I don't really want you to go to the comments and read that. Just nothing too big, but something about just that midget joke was just.
Yo, I literally just laughed at that.
I'm just like, I don't let nothing go, bro. That happened an hour ago. I did not forget about it.
Yo, that's funny.
Yeah. All right, let me hurry up because I gotta hurry up and get out this house. So yeah, I just wanted y'all to just see that he's not who he claims to be. You seen like an hour ago he was, but anyway. So, damn. All right. I got quite a few things that SPY had to hold above 730. I mean, 745 was like the front line. Really didn't want it to break under 745, or it would have been bad. It's in that territory still. It's holding right now. So we got a lot of things. Trump's talking right now. So one thing, since I'm talking about Trump, is that caught me. I got a notification saying not Rams. I got a notification saying that Trump canceled his golfing. Trump never cancels his golfing. And Trump canceled his son's wedding this weekend. So keep a close eye on Iran and Cuba. Keep a close eye on there in case he tries to like invade. Because he said he has something. Let me see if I can find it. He had to go to the White House to make sure everything is just good. So he had to turn back around and go to the White House. So that's off the rip. That was something that caught my attention. He said he's frustrated and may take decisive action against Iran. This came out after they said he canceled the thing. And then U.S. says that Chinese and Russian intelligence are using bases in Cuba to spy on American military. So that the negotiation with Iran has stalled, and drafts go back and forth daily without progress. They said a spokesperson said the differences between Iran and the U.S. is deep and extremely significant. And then what caught my attention, another thing was we got a 7 million put spike on QQQ. That was at like 315, I want to say. 7 million put spike on QQQ. And then like at 345, 10 million came in. A 10 million spike on QQQ came in. What else? All right, so 0 DTE puts lead calls by 17 mil. 6 DTE calls lead puts by 4 mil. 90 DTE puts lead calls by 36 mil. What else was there? What Rams was talking about, the Fed signaling. I don't know if y'all seen, but Fed Waller was talking all day. Y'all need to pay attention. The Feds when they talking, listen, like go see what they talking about. It's so important right now. So Fed signals rate hikes back on the table. Federal Reserve Governor Christopher Waller said the Fed may raise rates again if inflation stays high amid rising energy prices tied to the Iran war. Waller said rate cuts are no longer more likely than hikes. Wow. And called for removing the Fed's easing bias. Wow. So they're all agreeing with Walsh. For the Fed kept rates unchanged in April, but inflation concerns continue to grow. Was so much. The Philippines Central Bank is sounding their alarm. They're hurt right now. They could feel the large supply shock. It's a bunch of countries that's coming openly saying that they're starting to feel a shock. So I just want to we close now, but yeah, it was a 10 million put on QQQ. So I just wanted to tell y'all this because this weekend might get crazy. Trump, I wouldn't be surprised he did it before Memorial Day and called it a freaking American victory. He probably will bomb them and call it a victory, even if we didn't really win, because the market just reacts to whatever he says. Was all right. What else? It was something. All right, that's all I got. I gotta go. That's all I got, Rams. You could take it back. Oh, Bitcoin. Watch Bitcoin, y'all, because the market's not open. So watch Bitcoin. If we're going to sell off, Bitcoin is going to let us know. Where's Bitcoin now? Whoa, Bitcoin is selling off. So we'll watch Bitcoin. It finally broke the 776K. Rams, you could take back. I'm done. That's all I want to say. Oh, the answer to this, I'll put in the Discord too. If you are still on here and you did the poll, where you at? If you are on here and you did the poll, the answer to the poll is Head and Shoulders. Oh, well, I thought it was a bull trap reversal. Was this a trick question? But no, I didn't ask for a market event or a market outcome. That would be a bull trap reversal. That's not a chart pattern. So that answer was wrong. Nah, but I get what y'all was doing though. But that answer is wrong. The correct answer is Head and Shoulders. And if you picked bear flag, you're still correct because there's a bear flag on the right shoulder. So I will put that in the Discord. Those is one of the Head and Shoulders. I only pay attention to a few patterns, really. Head and Shoulders is one of my favorite ones as well. With the cup and handle, Head and Shoulders plays out often. And it's playing out because it broke the 76K. If it closed below 75K today, yeah, Bitcoin is going to be crashing down to 70K over the weekend. That's all I got, Rams.
That's all good. I'm gonna wrap it up too. I gotta take my son somewhere. He keeps asking me if I'm done. I'm done. He's just clocking the time.
He's done. He's done now. My bad.
Now, if you want to add anything, T, bet, guys, thank you so much for coming, spending some time with us like always every week.
Nah,
This was good.
you guys killed it. That was fantastic. I think we definitely need a part two, Rams, looking in the comments. There's just so much value there that is
Hell yeah.
it's even with all you did today is still going to be underutilized. There's just so much there. So and then I think also as you guys are using it, like please give feedback on
Yep.
how like what you're seeing, what you're not seeing, if something doesn't make sense. Because that's important too, because Rams is offering all this for free. So the least we can do is give them feedback on how beneficial it is.
Hell yeah.
Yeah, or what you see, if you want, what to make it better, or if you don't understand something, if it needs more clarity, any feedback is good feedback.
Absolutely.
That's a fact. All right. Well, Felicia, that's all you got.
That's all I got. Y'all killed it.
Well, I hope you get some energy and don't come in the Discord like this, please. Anyway, Spy Cap.
You're on a thin. You're on a thin. You're on a thin line, buddy. Thin line.
No, what? Are you my mom? Say, you sure she's not? Spy kept a pattern of 7 out of 8 years closing green on the last trading day before Memorial Day. Every time that happened, Tuesday gapped up. Besides one time, and that was in 2022. Wow. So yeah, we might gap up into 749 and smack. And yeah, because 750 is the top. That's all I got. Amazing work, Rams. That was really good. He's done now. You can tell him to come take you where you need to go. That was really good though. You spent a lot of time on that, which is good. I love being able to sit back and keep my mouth from becoming cotton mouth. What else? I just like learning and bro, stop talking about these cups. He has his son. He has to take his son somewhere, and you guys are being selfish talking about these nice cups that I have. So, anyway, I hope everybody have an amazing day. And I need the sniper's cap. Yo, they're so selfish, bro. Don't even look at the chat. Don't look at the chat. Don't look at it. But anyway, I hope you have an amazing day, bro. Take your son. I'm not even going to actually do no sniper's cut. Worry about your son. Your son comes before everyone else, and everyone should understand that and stop. You're the only one chatting. Levine's the main one asking about the cups. But now everybody have an amazing day. I hope y'all enjoyed yourself. I hope y'all learned a lot. I hope y'all be able to utilize the site more. I know Angie, you like flickered some light bulbs in her head, so that was really good. I like the feedback we got from her. Love you too. And y'all enjoy y'all weekend. There's really no weekend. We grinding every day, but of course take your mental breaks. But it's no set days, though. I don't believe in weekends, but anyway, yeah. Everybody have an amazing day. Serve others, grind, stay focused, stay disciplined. Really, stay disciplined. That's staying focused is one thing that I always say. But staying disciplined is the hardest thing to do. Yeah, we will go live on Monday, but I know we're getting some complaints about the Discord voice. I definitely agree. I just seen that we could go live from the Zoom and share it straight to YouTube. Like what the hell? We should have been doing that. So I don't know. We'll probably just do Zoom on Monday instead of the Discord because that shit is annoying. I only can hear certain people. We got to email them because I keep forgetting. I got to reach out to support.
No, I think I know what's going on. We're gonna talk about it in the meeting we got this Sunday anyway.
All right,
I think I know what's going on with it.
Of course you do, nerd.
Mm-hmm.
So everybody have not playing, but Ram son, you be blowing my shit. You know so much, bro. But all right, yeah, I hope y'all have an amazing day and serve others. Y'all already know that's how I'm in it. The highest human act is to inspire. It's the highest human act that we could possibly reach. Serve others. Don't be selfish, because you could put all your energy and time into your family, which is good, but you'll have a way huger impact on just life itself if you start touching others besides your family. Um, so that's all I got. I can't drag on. In Arabic, we say "Assalamu alaikum," which means peace be upon you, peace to the gods, peace to the goddesses, peace, love, light, and healing upon everybody on here. Yeah, stay consistent and disciplined. I appreciate everybody. I appreciate y'all time so much. Staying on here for 4 hours, I would never do it with no other. I swear to, an hour's the most that they're getting out of me. I would never do it. I mean, I will talk, but I'm not watching nobody for 3-4 hours. So I really appreciate y'all. That's a lot to do, to sit here and listen to me all the time, and then the two bipolar teammates that I got. So I understand, but I hope y'all have, even them. I hope Rams. I hope you having a phenomenal day. Talisha, I hope you have an incredible day. And
Thank you, bro.
blessings to y'all family too. Get some energy to Talisha. Okay, I'm gonna be dropping some voice notes. I ain't gonna say his name, but I might have to tell him, like, yo, bro, like, next time, I don't know what it is, but you gotta wake her up a little earlier, get her some smoothies with fruit or something, because her energy was just, and he probably gonna say, bro, I leave her alone when she like that, her attitude. I'm like, I already know. She takes me out with me all the time. All right, I gotta go, yo. I have an amazing day. Why did camera really zoom in? Yo, that's hard. Your camera zooms in every time you move, Talisha. I like that. You are too fancy, girl. Stop it. All right, y'all have an amazing day. I'm out.
Yeah.
Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.